I think real estate has largely done their business uh, sort of the same for the last number of decades. And we've seen in every industry the benefits of digitization and technology and automation to allow people that are at the top of their field to actually get so much more done. So we've seen some really cool things happening in other spaces as the cost of compute has gone down. There has been a proliferation of startups. There has been a rise of what's called like the solopreneur. And so we actually think that real estate firms are going to get smaller, but be able to run more assets. And so it's going to be a really exciting next decade here. And the folks that are jumping on this earlier are going to be able to get the furthest ahead.
Hi, I'm Adam Gower, founder of GowerCrowd.com, where we help real estate syndicators find more investors. Welcome to the Easy Win AI Real Estate Show, exploring AI's impact on the real estate industry. Each episode offers practical tools, competitive AI strategies, and expert insights. For essential news and updates, visit easywin.ai and sign up for our free newsletter with actionable how-tos like how I added hours to my day by creating this clone of me you're watching and listening to right now. easywin.ai, the only newsletter you need on real estate and AI. All right, back to the real me. My guest today is Thomas Foley, who is co-founder and CEO of Archer.re. What Archer does is it essentially expedites the underwriting process for analysts on deals. And it is absolutely incredible what they're able to do, how accurately they're able to do it, the resources that they can use, and most importantly, the blistering speed with which they can move a deal from identification to full underwriting is incredible. You're going to hear all about that on the show today. If you've not already signed up, please go to easywin.ai or actually go to GowerCrowd.com, hit the subscribe button and subscribe to our newsletter. There we have all kinds of really cool how to raise capital tips and hints and how-tos that you can also apply just about to any aspect of commercial real estate, no matter what your role. Okay. Thomas Foley is going to talk about Archer.re right now. You're going to learn how AI is changing fundamentally the world of commercial real estate. Here he is, Thomas Foley, coming right up. Thomas, oh gosh, I'm so pleased to meet you. And I'm dying to hear about Archer and what you're doing there, because you have some very cool statements on your website I want to drill down on. But before we start, you had a question for me, didn't you? So
yeah,
go for it.
It's great to meet you, and I've enjoyed listening to your podcast.
Thanks.
You ask a bunch of great questions to your guest, but I never get to hear, how you got into the real estate space and really why you're so passionate about AI and real estate right now.
Okay, so look, I mean, this is a podcast about you, so I'm just going to give you the very high level answer to that. But I got into real estate in the mid 1980s. I say over 30 years ago, because 40 years ago makes me sound far too old. But it was the mid 1980s, and a friend of ours ran a family office. It was a family office, and they were doing real estate development. And just one thing led to another, and I ended up raising capital for them. It's a long story. They wanted me to help raise capital, and it turned out I was really good at it. I was only 20. How old was I? 21, 22. But I was really good at it. So that's how I started in real estate. It's a long story. AI, though, how did it come about? I actually was sitting next to somebody at a luncheon, and it turned out that he was doing some kind of like, astrophysics type level AI stuff. Just turning my phone off, and he told me about some guy I should watch on YouTube. So I watched this guy on YouTube, Thomas. It blew my mind. Absolutely. Because I could think of all the ways that AI could be applied to the systems that we build. We build systems to help sponsors raise capital. That's our main business, right? We help them raise equity. And we've got state-of-the-art funnels. I mean, everything we do is like cutting edge. I saw this AI stuff. I said, OMG, I can implement this across the entire stack. Like, there's so many ways that I can improve all of us. I've never seen anything like it. It's usually one little piece of a funnel you can improve because it's got some weaknesses or some flaws in it. But this was sweeping. So I can find ways to apply across everything. So that's what got me obsessed. Now I use it all the time. But this is about you.
Yeah.
And about Archer. So I'm going to just ask you the same question, because I see you've got quite a long history in commercial real estate. In fact, I'm going to ask you a question. We didn't rehearse anything, so forgive me if I'm like totally off my rocker asking you this. But you started in 2013, I noticed, which was around when I started raising capital, actually, after the Jobs Act, with what looks like, based on your LinkedIn profile, looks like a crowdfunding effort that didn't last very long, but was interesting. So what's your story? And how did you get to where you are today?
Yeah. Well, thanks for having me on your podcast. My background, I'm a serial fintech entrepreneur and have spent a majority of my career looking to figure out ways to bring sort of data, technology, innovation, access to alternative investing. And the first company that I started after school, so I started in investment banking, but the first company that I started working on was a company called Expert Financial, and it was a stock market for private companies. So back in 2009, which was a tough time, but there was a lot of venture capitalists and a lot of investors that had shares of companies like Facebook, Twitter, Tesla, Groupon, Zynga, if you remember those names.
Oh my God,
and I was lucky enough to get the opportunity to pitch Tim Draper. And so Tim Draper was our main investor and our chairman. And me.
So you dropped that name, presumably assuming that I know who it is.
Yes. So Tim Draper is a famous venture capitalist.
All right.
He has backed, over 500 companies. Some of the larger ones were ones like Tesla, Solar City,
I see.
Baidu, Skype, a number of other big, interesting companies. Needless to say, we started working on one of the first private stock markets. And so we went through the process with FINRA and the SEC back from 2009 and 2012, working with Tim Geithner and Mary Shapiro back then to help work on what became the Jobs Act. So a lot of the crowdfunding legislation, the expansion from 500 shareholders on a cap table to 2,000, the ability to get liquidity when you're a private company was a lot of the work that we did. And there was two other companies during that time, Second Market and Shares Post, and they were doing some pretty interesting things.
Really?
Yeah.
You were involved in that, were you?
That's right. Yeah.
That's fascinating. I wrote a book on the passing of the Jobs Act.
Oh man.
I did. It's called Leaders of the Crowd. Woody Ness was one guy who was a heavy lobbyist in those days.
Yeah.
And I spoke to somebody who had been in the White House, somebody in Congress. I mean, I spoke to a lot of people. Sorry I didn't speak to you. And what I learned, it was fascinating, was that real estate was never part of the equation.
Yeah.
It's all about small businesses. And it's just accidentally affected real estate. It's fascinating.
Totally. So actually, that's a great segue. We worked on that business for about 4.5 years. And we learned a number of things. Even though we got through the regulatory approval, something shifted. And that something was VC funds got bigger and bigger. And also the big public investors like the Fidelity, Wellington, T. Rowe, MFS, all the folks that were buying IPOs, they were just coming into the private market. So we were solving for something that had almost sort of solved its own problem with the private markets.
Interesting.
And so at that point in time, we started to think about, well, we have this great regulatory approval, and that was really the asset that we had at that time. What can we
Mm,
do with it? And so that second company that I think you were mentioning, Benovate, that
yeah.
was what we were exploring next, which was, okay, now the Jobs Act means that you can do crowdfunding for a lot of things. What's the biggest opportunity? And we saw the biggest opportunity is this concept of breakaway RIAs, meaning the folks that used to be at the big wirehouses. Now
Mm,
they wanted to go independent, but the problem was they didn't have access to alternatives. Alternatives being oil and gas, real estate funds, real estate deals, um, natural resources, private equity, venture capital, all that stuff. And so we became the first platform to actually have all of these different products listed on there for high net worth investors, but really for the RIAs that were managing them. And so that was a really interesting experience. We got about 600,000, like high net worth investors on the platform. We got a number of the top funds and firms, and yeah, I think we were a little bit early because now you're seeing, the KKRs and the Blackstones, and everyone has a retail channel.
mm,
And so that was something that we were working on.
mm.
What ended up happening with that business is we ended up actually spinning out the regulatory piece, and the board lifted that. They sold that to what became Coinbase Securities. So Coinbase, in order to trade crypto, they needed to have regulatory approval, and we were the only, sort of designated what would be called a broker dealer from FINRA, and an ATS or alternative trading system from the SEC that was designated to trade like unregistered securities. And that's effectively what crypto was considered during that time period. So
Mm.
super interesting backstory there.
It
But
is.
but getting to spend time on that, the asset class that I was most interested in, that I had no exposure to before, was all the real estate. And so all of the real estate funds and partnerships and single deal syndications were the most fascinating part of it. And I just knew going through that process that, I've started companies. I look at the real estate space, and it is so far behind when it comes to technology,
Mm,
digitization, all those other things.
mhm.
But I also knew that if I just jumped into that space with a solution, I was going to fall flat on my face. And so,
Well, why did you think that?
uh, well, because I started other companies, and
Ah,
in starting other companies, you get a certain amount of humility from the lessons and the failures that come along with falling in love with a certain solution versus falling in love with the problem. And with real estate, I felt like I needed to basically get, a apprenticeship period where I could test
ah,
out a number of ideas.
got it.
And I was super fortunate that in the summer of 2015,
Mhm.
I went and had my, 100 coffee summer, and I just met with as many, yeah, as many folks in the real estate.
That is a brilliant idea, actually.
Yeah,
I'm not sure where you're going, but I'm guessing is that was to trawl for as many connections to learn the industry, right? That's exactly right. That is the best way to do it.
yeah, yeah, with no real agenda other than, hey, I'm new to this space. I have a couple ideas. I'm from the tech space. I'd love to get your feedback on this. Who else should I talk to?
Ah,
And
yeah, you do it exactly the same way that I do.
oh, good. Yeah,
It's a superb idea. You walk into a meeting with, I've got something to show you, right? I've got like a deal, or I've got,
yeah,
a plan, and are you interested?
yeah,
And who else can I talk to? And if you do it effectively, you
yeah.
end up meeting everybody you ever need to know in a very short period of time.
Yeah, so it was a wonderful summer, and the folks in the real estate space, I'll tell you this,
Mm.
uh, were so helpful. Everyone, for the most part, brokers, investment folks, and it was like really senior investment folks. Now I'm looking back, and I'm looking at the, like, it's the founders of, like, uh, Swift, or the heads of offices at CBRE in these different areas, and they're so welcoming. And then they're
Mm.
introducing you to the three next people, and going through that process, you also start to have interesting things to say to other people because you're getting all these interesting deep
That's right. You actually end up with insights that are deeper than anybody else because no one else is talking to as many people as you
Yep.
are.
Yep. And
That's really cool.
that
So,
was,
so let's it's fascinating. So let's move toward like accelerate, slam your foot on the accelerator,
yeah.
and get us to Archer because I'm
Yeah.
fascinated to hear what this is here.
Yeah, so I got lucky enough to get a role at HFF, and I went from a CEO role at my last startup to an analyst role at HFF, and that was where they said you have to start here, everyone else starts here, and it's all about underwriting. So your job is you have a computer, and they didn't give me a laptop. You only have a desktop, so on the weekend if you need to come in, you have to come in and work on the desktop. But it was a great experience, and you get the reps of underwriting, hundreds of deals, and you get the opportunity to talk to all these entrepreneurial real estate operators, and that was the coolest thing. It's
So
like,
let me ask you about. Okay, sorry, I did mean to cut you off. I shouldn't say I didn't mean to. I totally meant to. So you got all these entrepreneurial real estate guys coming in. HFF have given you a desk and a keyboard.
yeah.
So did you build when you were doing underwriting? Did you build models or did you check the work product of the guys coming in with their own deals?
No, so at HFF, we have an in-house model, and I got really fortunate because the person that was above me, this guy named Ben Bullock, he was just a whiz at Excel, super, super smart, really hardworking, and he built basically the best version of a broker model that we could use with clients. And so clients would give us, the financials of a potential property that they owned. And it was our job then to break that down and then model it out in terms of how we thought the investment market would look at it and value that deal.
Really?
And so our job, think of it as sort of like an M&A banker, but for a real estate property, right? And you're really projecting how those cash flows are going to perform when you think about that deal. And so I got the opportunity to train with someone that was super thoughtful, and he came from the investment space. And so he was different than the typical broker, which was just trying to slap on maybe a cap rate on a deal, but he was thinking about it. And that's why he had respect from a lot of the PE folks that we were selling to, because they appreciated how thoughtful he was in terms of that approach there. And in doing that, it was just so clear to me. We would go through this whole process of, you'd get the documents, you'd have to extract it from a PDF, you'd have to manually type all this information in.
Right.
You'd have to then go to like 6 different data source sites that we were paying for, manually enter that information in. We'd have to look up the tax records and the APN numbers and all of this information that it took to spin up this model before we could even do anything to the model to tweak it to like get an answer. And that would take anywhere from sort of like 4 to 8 hours per deal. And it just, to me, was just like, what are we wasting all this time on? And all these documents that are getting sent via email and via PDF, it's all just friction in the system. And so that got me thinking, this is low-hanging fruit that other industries have already definitely attacked. And over that time period, I got the opportunity to spend more and more time with clients. And so you go from analyst to associate to director, and now it's time to start bringing in business. But the primary role at that point now is you're working with all these real estate investment firms. And it also gives you the opportunity to talk about ideas. And so these ideas are ones like, hey, I have this idea around a better approach to deal sourcing, or a better way to do market analysis, or a better way to do underwriting. And I'd be able to bat around these ideas. And the fun thing about the real estate folks is there's no one building like cool technology for them for the most part, especially back 2015 to 2019.
Nothing. No.
And
Zero.
And so they're saying like, they're loving to engage on this type of conversation. And they're thinking it's fun because I'm from a different space. I'm sort of the new person to this game. And so I'm getting all of this great feedback, and it's sort of killing all the bad ideas I have, but it's improving the ideas that could work out,
Right. And so now hang on a sec. All right, good. So I'm gonna leapfrog a little bit.
Yeah,
So on the website, Archer.re, from address, so you just said 4 to 8 hours, right? Which is, 'cause I thought you were going to say 4 to 8 days of pulling data in and waiting for emails and then eventually manually uploading the information and eventually being able to run your analysis. But on the website, you now say from address to complete underwriting in 15 minutes.
yeah.
So tell me about Archer. How have you solved this problem that you've so clearly articulated
Yeah.
exists? Yeah.
So I was super fortunate to meet my co-founder at Wharton. We started working on the idea together and took it through Wharton's venture incubator.
Oh,
We launched the company summer of
that's cool.
2019, and we just started pulling together massive amounts of real estate data. So things from public sources, things from private sources, and we started to connect those pieces. And that was the biggest issue that we found at the beginning was just real estate data is sort of raw, there's gaps in it, and it
Mm.
doesn't talk to each other. So you might sign up for like 3 different sources, and that
Mhm.
data isn't coming together and talking to each other. And then after that, we started to build tooling and algorithms to be able to actually make predictions. Okay, if we have 10 sources for rent, what's the best rental data source? And if we don't have this one, should we use this one? And so we did that for every single input that might be required for a financial analysis for a deal. And that took us, sort of the first year is like really us connecting all that data and us starting to build the initial prototype of what a financial model would look like. What we can do now, though, which is really
Yeah.
exciting, is we can take a client's model. So let's say, Starwood is a new big client of ours, and they really only want to look at big portfolios. And so let's say that they have, a deal that hits their desk and it has 25 properties in it. They're gonna load up their model, and they're gonna upload their financial statements, and they're gonna upload their rent rolls. And each one of those rent rolls, they're gonna map one of them, make sure that it maps correctly. And usually our system's mapping that, in about 10 seconds. And then someone's going to go through and check that, which usually there's only a couple checks that they need to do. They're going to click save to Archer, and then they're going to start uploading the next one and the next one. And there should be no changes that they have to make going forward on that. Each one
Wow.
of those rent rolls typically take a person about 30 minutes to do. So we've taken a process that's gone from 30 minutes each one down to about 10 seconds with a couple, like a minute after of review, and then a bunch of 10 seconds after that. And then we can stitch that all together and push that back into their model.
Okay, so now what is the so what's happened here is you've made the process of consolidating basic data extremely efficient,
Yep.
and now they can run their own models on that data. Is that as they would do anyway? It's just taking them a lot less time to get the data in.
Yeah. I think the magic here
Mm.
is, and we just launched this concept called BYOM, bring your own model.
Okay.
And in terms of what you've seen in the past, which hasn't really landed, is there have been firms that have launched solutions that are really around like a web-based underwriting solution. And most people aren't willing to leave Excel. Or they've launched solutions that you can just underwrite in sort of whatever the software company's Excel model is. Both of those things aren't ideal for most firms. Most firms sit in a place where they know and love their own model. And so the
Right.
magic that we've done is we have an Excel add-in that
Mm.
we can plug into their Excel, and then we map to their model,
I
and
see.
they can just click refresh once they have the address in there and once they've uploaded the financials, and that pushes all of our data into their model.
Okay, so let me just understand. I don't want to get too deep into the weeds here, but I've got a model that requires a bunch of inputs.
Yep.
In some cases, presumably, depending on the asset class, Argus inputs as well, right? So you could
Yep.
pull data out of Argus.
Yep.
And then those to the extent, so when I've seen Argus outputs, I've seen them without formulae, I think. And it's just kind of a static, here's what it looks like kind of thing. And then somehow you got to get that into stress testing, kind of a format that allows you to manipulate some of the assumptions.
Yep.
But you're talking about even rawer data, right? Rent rolls and this kind of thing that is just flowing straight through into the Excel model that your clients have. Is that correct?
Yeah. So, the way I could show you, but one thing that we
Well,
can.
I'll tell you what, Thomas, let's just pause for a commercial break for 15 seconds and say, yes, I really want to do a demo with you. So let's set up a time separately for now to do an on-screen demo, because I'd really, really like to do that. Let's not do that now. We'll do that once we finish. But I do want to do a demo. Let's talk high level though now, if that's okay with you to do a demo, I'm like on the spot over here.
No. All good.
Yeah, let's do that. So the impression. Okay, so let me ask you to come at it from a different perspective. Who is your first of all, do you call them customers or clients or users or something else?
Clients.
So what is your client avatar? What does the ideal client look like to you?
So about 80% of our clients are investment firms. This is all focused on multifamily right now. So it's multifamily investment firms. We have some of the top brokerage firms that are clients as well, Marcus and Millichap, IPA, and MMCC, which is all within that Marcus and Millichap.
When you say investment firms, do you mean general partnerships or large private equity shops?
We have sort of smaller sponsors, as small as a two-person shop, all the way up to Star, which is a top.
Right. And so what kind of AUM, assets under management, is at the low end kind of?
AUM could be as low as sort of $10 million.
Really?
The main driver for their decision is they're looking to scale their underwriting and analysis. And even groups that are just getting into business are using Archer because they don't want to go out and have to hire an analyst or go overseas and get an offshore analyst.
It's very, very I'll tell you something. We met on LinkedIn, I think, Thomas. And spending a lot of time on LinkedIn at the moment. It's a fascinating place to be. And somebody cast doubt. I wrote an article or a post about one of my prior podcast guests because I think they do amazing things with zoning. And he wrote something like, it's not possible, it's all pitch, and all they're trying to do is raise money. So I just responded, well, have you tried it? And the reason that I mentioned that is that a lot of this, what you're talking about, and in general in the AI space, sounds too good to be true.
Yeah.
Right? It's like a hard leap for anyone. No, we do it our own way. That's not possible. What he's saying is blowing smoke, right? Whatever is like, there's no way. So let me ask you this, because this is another thing that you've got here for these smaller shops. How do you use AI to automate deal sourcing, right? Yeah. Automate deal sourcing as well as underwriting. How does that work? Because that's like the holy grail of real estate, is finding deals that work.
Yeah. So it's a fun question. This is the area that I think we tested out when we were transitioning. So when we first started Archer, we wanted to build all of these data tools for ourselves. We wanted to be the most data-driven investment firm in the country. And so we started building all these tools for ourselves. And basically the key areas that we saw as areas for opportunity were either areas of like productivity gain meaning really automating the underwriting and parsing and asset management side of the business, or areas where you could actually find additional alpha, right? Like how do you get edge or delta there, and the opportunity for that was, can you pick better markets or sub-markets, right? And then the second piece, can you sort of find and select the right deals, whether they're on the market or ideally before they come to market.
Right.
And so we spent a lot of time working on that problem. And what we call in deal sourcing, we have specific predictive factors, and we've basically like looked back in the data to find about 30 different factors that suggest, they don't guarantee, but they suggest a deal is likely to come to market soon, or likely to be in some kind of like selling position.
And you do offer this, right? This is one
This
of
is
the
to every client. Every client gets this. And what's funny is every client, not every client, a lot of clients say that they want it, but the issue is,
yeah.
do you want to pick up the phone and make those calls? And what's funny is once we've started to sign on brokers, we found this magical marriage between investor clients that say that they want those deals, and now we can actually pair them with a Marcus and Millichap, local broker to do those calls, because both sides are incentivized. The acquisition team wants an off-market deal, and the broker wants a buy-side commission. And so there's really interesting.
And the broker is trained to sell.
And the broker has the relationship,
Right.
so there's all these great positives. And we stress test this. So before we did a full pivot to a SaaS model, SaaS, software as a service model, back in Q2 of 22, we were testing, basically doing this on our own. So we were trying out this concept of, could we be a bird dog, right? Could we do sort of like deal sourcing as a service? And we just started advertising, hey, we have this seller propensity, and we can do this auto underwrite where we don't have any financials, and we can make a predictive underwrite on a deal. And we got 65 of the biggest real estate investment firms to sign up with us, and they would pay just if we could successfully find and they could close a deal. And we got all this interest, and we started putting together these lists and giving it to them. And what we found is they were really appreciative of it, and then they'd get busy doing something else. There was a marketed deal that hit their desk, or there was something else, and we were giving them these like gold lists.
I have an idea.
Yeah.
No, I have an idea.
Okay.
Yeah, keep going. I'm not going to say it now. I'm going to say it when we stop recording, but I have an idea. Yeah.
But then the second version of that was, we said, okay, well, we can make those calls. And so we started doing those calls for them. And we started to get these opportunities. And they say,
wow,
how did you know about this? Or how did you know that our NOI was this? We actually just came out of a meeting talking about this asset. And so we started to feel like, wow, this is working pretty well. We were sending out 150 blind LOIs a week on behalf of these different clients.
No way.
And then we started to see a
wow,
couple of things. One, people were coming back to us and saying, yeah, you got the situation right, but we'd rather talk to a broker about this if we're going to go through it. And so that became.
So they thought that you were a buyer?
Yeah, they thought we were a buyer. Or
are you selling an LOI? Okay.
We were selling like a LOI on behalf of another.
Unsolicited LOI.
Yep.
And they figured, oh, there is a problem with that. So I came across that problem. I made an offer to a guy once. I said, how much do you want for the building? He said, whatever. He gave me the price. I looked on the thing. I made the big mistake of saying, okay. I should have haggled.
Yeah.
He went away and he must have thought, oh,
got one.
What did I miss here?
Yeah.
And then ended up keeping the bloody thing. If I'd haggled, he'd have sold it to me for less, probably in the end. Well, that's really interesting, Thomas.
Yeah.
So go on. So now, can it keep connecting these dots? So now you've got these LOIs, and what are you doing? How are you bringing the brokers? They're like a.
The brokers weren't involved at that point in time, and we were testing this out, but we were also seeing interest rates going up. And it meant that deals just weren't making. So even though we were getting connected with the sellers and we had these buyers that were interested, their challenge was they couldn't make the deals pencil anymore. And
who couldn't?
The buyers. The buyers were saying, oh, now we're only willing to buy this deal for this. And the sellers had just seen pricing from deals that had recently traded that was up here. And so you had this bid-ask gap. And as we've probably seen in the last 2 years, it's been the quietest market in terms of transactions that we've ever seen in history. And that's because of the drastic increase of interest rates that have happened. And so Q2 of 22, we had started writing about this more and more. We got reached out to by, at that point in time, the chief development officer of SVN. So sort of a national mid-market brokerage firm, Solomon Paritsky. And he said, hey, we have all of these brokers around the country, and we think that technology is the new thing. We're going to need this, and we want to get ahead of it. we'd love to do a deal with you. And
Mm.
so we talked as a team, we talked to our board, and we said, this will be our first time that we're actually selling this as software. Is this something we want to do? And we came to the conclusion that we did, and they were a great first partner. And that sort of got the ball rolling of us going from focusing on anything for ourselves to fully focusing on clients.
All right, so I do have some ideas. Let me ask, I'm just going to drill down on these. Anybody who knows me well enough will be able to read between the lines what I'm trying to get to here. But so are you still, so you don't have exclusivity, right? Your service is accessible to anybody. There's no geographical restraints. There's like anybody can use your, you know what I mean? It's like you own LA or you own New York or something.
Totally.
Okay.
Yeah. So when we were doing that, that deal sourcing as a service approach, we explored a bunch of different
Models, right? Yeah.
different models there, and exclusivity was the number one question that we would get with people. And we initially gave exclusivity, and then what we gave was sort of first come first serve on it if they would fit into it, because the challenge that we had is we saw people that we were giving exclusivity, they weren't paying for exclusivity, so they were getting it for free, and they weren't, and that made them not action on the deal.
Yes, that's right.
Yeah.
Isn't it funny? People, I learned this as a kid. We had a foosball table that was free. I got slammed up and bashed up, and that's because nobody really valued it. Yeah, we used it all the time, but nobody really, because we weren't paying for it. All right, let me ask you this question. So do you do individual sponsors use your platform? It's not brokers, but individual sponsors use the platform to source deals?
Yeah, we have, we have a whole section within the platform that a client works with us at the beginning, and they can spin up one or multiple digital buy boxes. So basically a digital buy box helps them refine their investment strategy as it relates to location factors and as it relates to investment factors. And so we are scraping and pulling in, a majority of marketed deals that are coming in, and we are scoring those deals every time that they come in to suggest which deals are the best fit for this.
I see.
Yep.
And what about off-market deals? That's kind of where you started, right?
Yeah. So we have every basically property APN in the country, multifamily, and we have data about all those different ones. And so we're creating seller propensity predictives around which deals are most likely to come to market for every property. So not only are you getting your marketed deals like a kayak.com, but for real estate deals, you also have all these other deals, so that you can also say, hey, I just saw this deal across the street. I'm meeting with that owner later. Maybe I can talk to them about their deal. Maybe I could run a predictive underwrite, put together a valuation on that, and say, would I be interested in buying this now?
At this price.
At this price.
Amazing. From address to complete underwriting in 15 minutes.
Yeah.
Right. I'll tell you what, we could definitely talk for longer, but I do like to try and keep these down to what I call average commute time, which in America is 30 minutes. And again, for those who hear me talk often enough, know that my next line is, but in California, that's 3 hours. So we could talk for another 3 hours. But I do seriously have a question and a follow-up.
Yeah.
And a suggestion that I want to run by you. But let's wrap up. Hate to do it because I'd love to talk to you more. And we will. But 3 rapid fire sign-off questions, if you don't mind. And you realize why I'm cutting this short as soon as I start telling you about my idea, because it's like the next step. Why should real estate pros be paying attention to AI today?
Yeah, I think real estate has largely done their business sort of the same for the last number of decades. And we've seen in every industry the benefits of digitization and technology and automation to allow people that are at the top of their field to actually get so much more done. So we've seen some really cool things happening in other spaces as the cost of compute has gone down. There has been a proliferation of startups. There has been a rise of what's called like the solopreneur. And so we actually think that real estate firms are going to get smaller, but be able to run more assets. And so it's going to be a really exciting next decade here. And the folks that are jumping on this earlier are going to be able to get the furthest ahead.
That's fascinating. I hope you can't hear the blower going on in the background.
Can't hear it at all.
That's okay. It's drowning out everything that I can hear, actually.
Yeah.
Right. It's a really interesting perspective. Again, anecdotally, I've come across sponsors of all different sizes. There are those that like to have, for some reason, huge staff, right? They have, 50, 60, 100 people on staff. They love that.
Yep.
And then I know shops that have humongous portfolios and there's like 3 people.
Yep.
The principal, a bookkeeper, and a runner, and
Yeah.
everything else is outsourced. So it's interesting you think that's the way things are going to go. Second question, Thomas. So how do you use AI? I mean, I presume you use it all the time. Other
Yeah.
than Archer.re, how do you use AI? Like on a daily basis? What are your tools?
Yeah. So I think it's getting more elegantly incorporated in most of our tooling. We are a Microsoft shop in general. And so we're getting the benefit of all the integrations of sort of
Copilot.
OpenAI
It's
and
called Copilot, right?
yeah,
It's
and their
Microsoft.
co-pilots internally. I'd say that that's mostly used for like the blank page problem that you have when you're starting an email or when you're writing a blog post. But that's where I spend a lot of my time. I have to give a plug. My wife leads North America on the Google Cloud and AI side in terms of some of the teams that she runs for sales. And so I use Gemini actually a lot as well.
Mm,
Our team is exploring different ways to use AI beyond where we're using it right now. And the main areas that Archer's using it is
mhm.
really what's called ML and NLP, so machine learning and natural language processing. And that's really breaking down a lot of the sort of information on all these different documents that we
Mhm.
get sent or that our clients get sent, and they need to parse and map. And so we do a lot of the training for our systems using ML and NLP.
Okay. And that ultimately allows your clients to chat with their data.
It allows for the system to get smarter. So an example is a client puts in a rent roll or T12, an operating statement.
Mhm.
We parse it through the system, and initially we get that 95% of the way right for them.
Okay. Got it.
And we get it right sort of in terms of how a lot of clients want to look at it, but they might have specific categories that they bucket that into.
Mm.
They do that one time, and that takes about 10 or 20 seconds. They click save to Archer. The next time they run any T12, the system learned to do that right. And so
Awesome.
that's
Right.
that's the magic behind it, where we don't have to go back and code new logic. That
Mm.
logic is getting coded for that. And we actually, that was the way that we trained our initial rent roll and T12 parsing, is we just kept feeding new documents through. We
Mm.
corrected it one time when we'd see where it would go wrong, where it thinks payroll isn't the same
Right.
thing as payroll and benefits. We
Right.
train that, and then we find these 10,000 codes. Now the system can recognize all these things in the right category. That's the cool thing about just the compounding of training.
Mm. You're kind of looking for, it's kind of error checking and
It
error
is.
correcting. And
Yeah,
there are no more errors.
that's right. That's right. And it's taking the benefit of running the same data set through. And then
Mm.
you're like, cool, this now got it 60% of the way right. Now it got it 80% of the way right. And when you get to the end, it's asymptotic in terms of the amount of correctness that you're getting through.
Right. It's done. Okay. Last question. So this is the Easy Win Real Estate Show. I keep forgetting the name. It might be the Real Estate Easy Win Show, but one of the two.
One of the
The
two.
point is,
Yeah.
I,
Yeah.
the point is that I'm trying to deliver easy wins to listeners, right? Something that they can do. That, let's say there's somebody that's not used AI, right? It's just not really explored it for the same reasons, they don't believe it. They've tested it, didn't work, didn't do anything. Can you think of like something that somebody can try right now that will give them a kind of a eureka moment? Like, oh my goodness, I can't believe now I'm like me, right? Like I got to learn more about this. Something really easy, some really simple, easy win. Maybe the way that you use it or something you've discovered.
I don't know if this is the right answer, but I would go to either Google Gemini or ChatGPT,
Mhm.
And I would open up the text prompt, and I'm thinking about, I don't know if people like board games out there, but my family loves Risk. And my brother and I write each other letters as pretend generals from the game Risk. And so you can go into Google Gemini and you can type in, I want to write a Civil War letter from one general to another, and I am playing the game Risk. And you can feed it a couple more just ideas and click, please draft this letter, and it will go. And you will see the magic of an amazingly thoughtful letter get spit out. And so I literally did that earlier today. Again, I don't know if that's the most helpful example. It is a specific example of what I just did.
It is very, very cool. I absolutely love that. I ran a course for real estate professionals a few weeks ago on how to use AI. And we did some fairly advanced stuff. But the other thing I showed folk was how to play 20 questions.
Oh, fun.
Yeah, with Chat GPT over the car speaker, right? So it
Yep.
Bluetooth's in, and the kids in the back playing instead of sitting quietly, they're playing an actual interactive game. So
Yep.
I love your example. Thank you for sharing that.
For sure. Thank you for asking.
Thomas Foley, don't hang up. Thank you for joining me. You are co-founder and CEO of Archer.re, and it has been a huge pleasure meeting you. Thank you.
Yeah, thank you. Thank you, Adam.
All right, that was Thomas Foley, who is co-founder, actually, and CEO of Archer.re. What a fascinating conversation. We did diverge from all the things that I actually wanted to talk to him about. But we are scheduled as of right now to do a demo of his platform. So you will keep an eye out for that. We'll publish that, and definitely keep out for that. It should be very interesting to see a walkthrough of the Archer platform, so you get a feel, hands-on kind of feel for yourself, how it works and how it can help you. Thomas, really nice meeting you. Thanks so much for joining me. I'm glad that we're in the same kind of general part of the world. It's nice to meet somebody who's relatively close by. And thanks for sharing your ideas and being willing to do a demo. I'm looking forward to that. And thank you, dear viewers, also for joining us today. Hope you found it interesting. Like I said, do keep an eye out for that demo. It should be absolutely fascinating. Can't wait to do it. And that's it. Until next time, this is Adam Gower signing off.